Market volatility should not be a surprise when it occurs in such a rapidly growing crypto market. Unless you're a newbie in the crypto and trading world, having a vertigo at prices for assets in crypto should be a normal thing to feel. Currently, the cryptocurrency market is at the levels that some experts describe as the very extreme of what the current bull market can carry. The most recent events occurring in the market have sent different messages to different people. To some crypto prices such as Bitcoins will keep soaring higher, while to others, a dramatic skyrocketing of stock or crypto prices is followed with a huge dive, something that is somehow usual in the trading market. This brings the big question. With the volatility that we've seen on the crypto market so far, especially in 2021, is there a looming crypto crash this year? Now, before we start, make sure you subscribe to our YouTube channel so you're up to date with the most important updates about cryptocurrencies and the world of investing in general. Having said that, let us get right into the video. Since the beginning of 2021, Bitcoin has been on a rampage and its price is soaring like crazy, to a point some experts say the higher the price rises, the cryptocurrency becomes less risky. However, this is not an unfamiliar scene. The reverse happened in 2017 when the Bitcoin prices surged to almost $20,000, only to crash moments later. The fateful December 22, 2017 event is still fresh on most investors' minds when Bitcoin fell by 45% from its peak. During that time, Bitcoin had hit an all-time high of $19,783,000 just 5 days before. This cryptocurrency bubble burst resulted in a large-scale sell-off of cryptocurrencies, making the prices drop even further to below $11,000. There are striking similarities to the present-day surge. Towards the final week of February, Bitcoin experienced 2 price crashes. These crashes sent a wave of nerves rippling in all cryptocurrency markets, with red screens all over the board. First, the price tumbled from an all-time high of about $58,370 to about $52,150 during the start of the week. There were, however, promising signs of recovery as prices increased again to $55,000 on last Tuesday. There was then another slip as the cryptocurrency went below $50,000. By 26th, the prices had shockingly plummeted below $44,000. The market analyst went ahead to describe the February crypto collapse as a price correction, although there is yet to be a clear reason for such a big adjustment. The wild price swings are not a strange issue in the world of Bitcoin, as well as other cryptocurrencies, mostly exacerbated by the inundation of huge amounts of capital into such an evolving market. Other major cryptocurrencies also saw significant losses, including Litecoin, Ripple or XRP, Ethereum or Ether, the meme coin, Dogecoin, and Bitcoin Cash. In total, there was a wipe of more than $400 billion from the combined cryptocurrency capitalizations in what has been the highest loss of value in the history of the crypto market. When looking in terms of percentage losses, Bitcoin has experienced worse crashes, the most notable crash being in 2017 after it experienced a great crypto bull run. The price, however, ended up falling from about $20,000 to less than $10,000. The latest losses that Bitcoin is experiencing have been caused by the day traders, with an excess of $2.3 billion worth of Bitcoin derivative contracts liquidated by exchanges of cryptocurrency on 24th February 2020. The more the prices of the cryptocurrencies fall, the more stop-loss traders will potentially be triggered, and this means that Bitcoin is automatically sold if it gets to fall below a particular level. The price fall could also attract a fresh interest from buyers who are probably waiting for the market to be calm before they hop on board, while some analysts predicting that the price of Bitcoin might rise above $100,000 in 2021 as a repeat of the pattern that was experienced in its past major price rallies in 2017 and 2013. In spite of the current dip, the price of Bitcoin is still up by about 500% compared to the same time last year. Renewed interests from retail buyers and institutional investors joining the fray have been the major boost in the market. Major firm investments, such as Tesla's $1.5 billion February investment, have also added to the emerging reputation of Bitcoin as a type of digital gold, and this has seen it increasingly being considered as a store of value thanks to its fixed supply. Moving on, Bitcoin contains a basket of both new and old catalysts that are pushing its valuation into nosebleed territory. One of the catalysts is the traditional argument that Bitcoin will help fight the natural devaluation of fiat currencies because of the increasing global money supply. Additionally, more and more businesses in the US and globally have started embracing Bitcoin as a form of payment. Very recently, the Satoshi currency, the largest cryptocurrency in the world, has been riding on the coattails of Tesla's CEO Elon Musk. Musk is not shy about supporting cryptocurrency on Twitter alongside Tesla's Bitcoin investment in February. The electric vehicle giant company follows past adopters such as MicroStrategy, PayPal, and Square. Bitcoin has had an incredible rally. Give or take, Bitcoin has appreciated 4.7 million% in the last 10 years. We have not had a lot of assets in the history of mankind to exhibit this kind of appreciation. To put it in simple words, Bitcoin has created millionaires. However, this rally has not been all smooth, but all bumpy throughout. As a matter of fact, crashes and volatility have been both a crucial part of the experience of Bitcoin. Many of those crashes began in environments similar to the present case, when all looked well and further upside seemed almost to be guaranteed. That history might suggest that there is another reversal on the horizon, almost certain to happen again. This, however, does not mean that if you're a cryptocurrency investor, you need to hurry and sell your Bitcoin immediately. Still, you should at least be on your guard. Moving on, what has the world of cryptocurrency been like in the past? To a skeptic, the events of early 2021 seem to be an awful lot like late 2007. During that time, the same as now, Bitcoin was soaring. It cleared $1,000 on 2007's New Year's Day. By the time December came, Bitcoin was over $18,000. This seemed to guarantee $20,000 and even more. All kinds of cryptos were rallying. However, as good as the year 2017 was, the following year was nearly as bad. In US dollars, Bitcoin was halved by February. Towards the end of 2018, the value was below $4,000. However, the decline that Bitcoin experienced in 2018 was not the first huge one to be experienced by the cryptocurrency, not even close. The year 2012 saw Bitcoin dropping by about 49% twice, with one decline a 3-day 57% punishment. Another 3-day period in the following year, 2013, saw Bitcoin experience an incredible 83% plunge. Later in the same month, it started a stretch of over a year, going from about $1,100 to an unimaginable $150. Also in 2017, which was a banner year, Bitcoin fell at least 30% for 5 different times. There was then when the 80% plunge that started towards the end of that year. As a matter of fact, of late, the volatility has reduced somewhat relative to early trading. A more extensive investor base and wider adoption have to continue the moderation from now on. Still, we have seen this before. Bitcoin can move north hurriedly, but it can also move and has moved for times in the past south at roughly the same rate. Meanwhile, what made everybody get concerned about the possibility of a looming cryptocurrency crash in 2021? There are a pair of catalysts likely to trigger a massive cryptocurrency decline in 2021. The first catalyst is just the parabolic gains not solely in Bitcoin but also across asset classes. We have seen multiple stocks go crazy. That does not just include miners such as Riot Blockchain and Marathon Patent. It goes beyond the Reddit stocks such as GameStop and AMC Entertainment. Products have taken off. Even in cryptocurrencies, Dogecoin, which began as a joke, currently has a $9 billion market capitalization. Can you imagine that? There will be crashes everywhere, whether in stocks, cryptos, or commodities. and these crashes may well read across to Bitcoin. Assuredly, there is cross-ownership between hot assets and Bitcoin. The owners who experience losses from all corners are most likely to de-risk through converting Bitcoin to US dollars. Besides, there is a regulatory environment. There have been public and repeated concerns raised about cryptocurrencies by the Treasury Secretary Janet Yellen, especially on Bitcoin. Without a doubt, Yellen cannot ban the trading of Bitcoin and reduce its value down to zero. However, she can implement potentially bullish catalysts, such as the long-awaited exchange-traded fund launch, which will have to be approved by the US Securities and Exchange Commission. Lastly, there is the chance that Bitcoin and other altcoins have run too far. It stands to think that at least the incremental buys from December are not hardcore adherents of crypto who trust that Bitcoin can disintermediate financial institutions. They are just joining Bitcoin for fun. There could be some weak hands that have jumped on board in the current trader parlance. They are not necessarily the kind to ride out longer-term volatility. Having heard so much, you might be stuck in between storming out of the crypto market or staying. It is, however, worth repeating that all these risks discussed earlier do not mean investors have to rush and cash in their Bitcoin. Assuredly, for some reasons, a cryptocurrency investor can trust that Bitcoin will crash once again, and Bitcoin is still worth owning even now. One thing to take away is that a crash might still be a long way off, and more upside could follow. An analyst might have correctly predicted that Bitcoin would crash within a year in 2017. An investor who listened to that prediction and sold their Bitcoins still missed out on profits of at least over 200% that followed later. This does not have to be the end at once. Another thing to note is there is a case that attempting to time the crash with that assumption it happens is a fool's errand. It is a notoriously impossible strategy to time the stock market. The history of Bitcoin shows that it is not any different. Long-term cryptocurrency bulls can reasonably argue that monumental volatility is just a fact of life, at least for now. However, suppose the long-term bull case is successful. In that case, the ability to ride out the immense volatility will undoubtedly pay off, even if there are some short-term pains along the way. Neither is an unaccommodating logic, but crypto holders have to at least keep in mind that this is not the first time this is happening. We have been here and seen all this before. Short-term optimism bursts, such as the ones we're experiencing now, are almost always accompanied by a reversal. I do not believe that this time will be any different, although it remains to be seen how steep the reversal will be and from what point it will start. But the bottom line is, a crypto or stock crash is always followed by a resurgence, which sometimes exceeds the pre-crash levels. Thank you for watching until the end of this video. If you found this video useful, make sure you subscribe to our YouTube channel and comment down below what your predictions are on the looming cryptocurrency crash in 2021 and whether you should sell or hold your cryptos. Take care, and we will see you in tomorrow's video.